Hey guys, what's up? In the next couple of videos, I'm going to try to answer some questions that I had from this week's trading. One of them was, Leo, what is the difference between trading oil futures, options on oil futures, compared to actually just shorting oil-related stocks? And I'm going to show you some charts just to illustrate this quick example so you have a better understanding that sometimes the correlations are not 100% there, and sometimes they are running in a 99% correlation. So as you know, we have a magnificent trade on oil to the magnitude for some guys from 40x trade, depending on this entry on oil puts yesterday. Now what I've got right now in front of you guys is a chart of /CL. If you're on TD Ameritrade, that is futures for oil, and so you can actually trade options on those. And you would trade options on those in the same way that you would actually trade options on stock, with the exception that instead of trying to profit from a movement in a stock, you would actually trying to profit from a movement in a price of oil, in this case, utilizing options. So it's the same thing, guys. The benefit again is you don't have to worry about PDT, you don't have to worry about any of that stuff. And so this move right here, in some high flying stocks like technology stock, this wouldn't be a big deal, right? But when oil drops from 78 to 73 within 2 hours, okay, that's what makes you a killing. So that is the structure of a 80x trade, right? You're buying puts as the thing looks like it's pumping higher by accumulating your put options as price of oil makes this bounce. Basically, you're shorting the bounce as you would in a move 2, in a move 11, or in a move 3. And you know, if you time that on the last day of option expirations, unfortunately oil contracts right now, they used to trade a few times a day, but as far as options, but now you only have Friday expiration on option, opposed to like trading S&P 500 futures options. They can expire, they actually expire every day, so the opportunity is there every day. But more on that in another video. So to compare this move in oil, in the underlying, actually that all the oil stocks should be strongly correlated. Well, if you would have just traded oil stocks yesterday, you would have not made shit, okay, because they were not moving. So while oil makes this huge move for oil, right, because normally oil moves 50 cents, $1. So when it makes a huge move and you catch it on the last day of expiration, that's how you're able to capture this 80x trade. Again, in some of these strikes, depending on the strike, I mean, if you were closer to the money, like 77 strike, you had like a 30-40x trade. If you're buying some out of the money, if your account was not huge and you were buying this 75 strike puts, you could have bought them for 2 cents and they were going for $1.60, guys. That is a 80x trade, guys. And with oil puts, they're a little bit different, okay? They basically, when I say they were going for 2 cents, every option on oil option would have costed you $200. So a 2 cent option on oil is actually $200. So for every $200 you would have invested in this trade, in the 75 strike, when the price was moving higher, you would have been able to cash out each contract at $16,000, guys. 200 to 16,000. This is the kind of trade this was. So depending on your entry, though, you could have gotten in earlier. We were expecting this move, of course, slightly earlier. It never pays to be too late to the move. So in instances, you're going to start building your position a day earlier, 2 days earlier, sometimes before that move materializes. But the key is to stay with the position. And more on that in another video. But so to illustrate this big move, in contrast with some of the oil-related stocks, one of the heavy hitters, right? PXD. And listen carefully to these stickers, because just because they have not dropped yet does not mean that they don't represent a great opportunity to actually short oil stocks next week. And that's the whole point. You tuning in into this video today to learn the difference of what could actually make you money. What is the recipe behind a 40x or 80x trade? Well, you're not going to be able to put a 40 or 80x trade on a stock like PXD. As you can see, while oil was dropping, I mean, this stock didn't do shit. I mean, it's at 220 bucks for the day, right? So that's where it was. It actually was pumping a little bit, went sideways. So this oil stock didn't do anything. If you take more of a common stock like Chevron, that's oil related, right? Nothing, right? I mean, the stock ends up positive 44 cents for the day, despite of a 4% collapse on oil. How much sense does that shit make? Well, it doesn't, because sometimes the market doesn't make sense, okay, because of this delay mechanism. There is a delay effect. I'm sure Chevron will be dropping sharply next week, and I'll lay out the case for that and some other oil-related stuff in the next couple of videos. But just these stickers, guys, they're not going to run higher next week. They're easy shorts. But the question is, why would you short them? Because the price of options on them is going to be much, much greater. The price of options on these things is going to be much greater than actually shorting oil futures utilizing options. So CVX, EOG, okay, that's another oil-related name. And as you can see, nothing. It dropped 13 cents. Oil drops like crazy. Let me go back, like compare this chart to this chart of actual oil price. I mean, look at this. So oil is doing this, oil related stocks ain't doing nothing. So that's your answer to the question, okay? Sometimes the price of the actual commodity is going to be doing this, and oil stocks are not going to be doing anything. So unless you have your account set up the proper way, okay, you know, you're thinking, okay, well, if oil is dropping, I'm just going to go short some oil stocks. It's not going to work each and every time. At times, which I believe next week, all oil stocks are going to be very, very positively correlated to a further movement in oil. And so I believe this delay effect is going to come to an end Monday. I think oil stocks are going to be dropping. But again, how would you trade this? Okay, you would want your ultimate way to trade oil is actual oil futures by utilizing options. So you probably have never done that before. Most of the traders, they associate, okay, well, if I'm trading futures, well, I never traded futures. I don't know what the fuck does that mean. And, you know, guys, it is easy. If you can trade a stock option, you can trade oil futures. Okay, there's one thing that you got to do is you got to call your broker, and if you're already set up for trading options, there's two things you need to have. You need to have a margin account, and you need to ask for an approval from your broker to allow you to trade futures. Basically, you would pull up the option chain the same way. Once you type in the ticker for oil /CL in your TD account, you would basically get multiple expirations. You would pick out the expiration we're looking to trade, and you would proceed placing the trade the same way you would trade a stock. So same stuff, super simple, guys. But for the purpose of this video, understand that even though the price of something could be crashing and something else is related to it, there could be a delay effect. So for example, ENPH, okay, we had some nice shorts on this thing. This is an energy related play. And at times it is highly, highly correlated to the price of oil, and at times it's not going to do anything. So yesterday, we actually, on Thursday, we shorted the NPH when it was just above 230, and we had a decent drop right in the beginning, right? It goes to 219. So this trade was making a little bit of money, like 3x, nothing big. But after that, it just stalls out and goes sideways, despite of this insane drop in the actual oil price. So there's going to be some days where things don't make sense. Simply, it's not because they don't make sense overall in the market. It's because for a moment, there's just a small disconnect. And most of the traders tend to give up easily in circumstances like that because they're looking at this, well, shit, it doesn't work. It doesn't fucking work. I'm going to take another trade. So they go take another trade. And comes the next day, they're like, oh my God, this shit is dropping like crazy. I would have made so much money. But by that time, you're already in another trade. So sometimes, guys, understanding that there could be periods in time where stock that is related heavily to a particular commodity is going to go through a disconnect. And it doesn't have to be a commodity relation to a stock that's heavily related to that commodity. It could be just sometimes the parts of the market that lose that correlation. They go for these moments. But then your goal is to trade just on the verge when that correlation is about to go as close to 100% correlation as possible. So, and we're on the verge of that actually taking place. So congratulations. If you're watching this video, you're definitely watching it on time. Don't miss the next video, guys, where I'm going to tell you when actually is the best time to trade the market, guys. When does the market actually open? You're going to be shocked with the answer because it's not what you're thinking. So again, set up your account the right way. If you need help with that, call 13 Market Moves, guys. We're going to help you out. Go to 13marketmoves.com so you wouldn't miss out on moves like this. These are crazy moves, guys. They don't happen every day. But when the recipe is right, guess who's going to be there ready to take these trades and guide you for these trades? Damn right. Any coach here at 13 Market Moves will help you out with that, guys. So let's rock. Stop using conventional methods that you see everybody else is using, okay? I guarantee you there's not another channel in the world that's telling you about trading options that expire on oil, okay? Anywhere in the world right now. You can only come to 13 Market Moves and get this sort of information, guys. And I'm the messenger. I'm giving you these ways to make killer trades that you can't. I mean, certainly you're not going to get this trade by watching CNBC videos, but if you're not utilizing this information, that's on you. Now, if you watch this video and you're like, man, I would love to learn how to do this, but I just need a little help, I need a little push, I need a little better understanding than this, I invite you to come to 13marketmoves.com, schedule a call right now so you could trade with us next week, guys, and become a better trader. Let's roll. I'll see you guys next video soon.